All right. Welcome back to another episode of the Real Estate Investing Club. Hope you guys are having a great day. As always, it is Friday here on the podcast. So bringing that Friday energy to you guys. It's a good day for a second reason because we got Jason Henneberry with us here on the show. Jason is up in beautiful Victoria, our sister city up there in Canada. He is the co-founder and COO of Tango Financial, Canada's largest mortgage broker, with over 400 mortgage agents across 50 brands, and they have funded 4.7 billion in mortgages. That's billion with a B. It's a big number. But he also has experience in investing and rent to own. A lot of stuff to go into here. He is an expert at the marketing side. So, Jason, excited to jump into this. Thanks for hopping on the show.
Cool. Thanks for having me, Gabe. Appreciate it.
Absolutely. I told you before we got on here, we always like starting with stories. We like to hear how people got to where they are. Sounds like you got a good one. So why don't we go back to the beginning of your story in real estate and tell us how you got here?
Sure. Yeah. So I actually got my start in real estate just being on the finance side. So like when you mentioned in the introduction, we have a big mortgage brokerage. And that was sort of my entry point. So I was just, doing mortgage loans back in the early 2000s. And when you're around real estate, you probably love it, and I do. And so I ended up just as soon as I could buying some properties. I mostly stuck to residential stuff, but I built a pretty decent portfolio in my late 20s. By the time I was 30, I had I, I can't remember exactly the number, probably about 20, 25 doors, something like that.
Nice.
And So it was a fun few years building that out. And then 2008 hit and the market turned a little bit, and my business suffered. Like I had a few things go sideways during that period of time, like a lot of people did. And I ended up having to actually liquidate my portfolio. So that was a painful moment, just to take stock and and wipe the slate clean on a few things, and then rebuilt from there. After 20, that took a couple of years to manage through that process. So yeah, so there's been some good moments, and then some not so good moments. But what's interesting is I haven't lost money in real estate. I faltered in my business, which forced me to sell my real estate, which was a different thing.
Yeah.
But it was great that the real estate was there because it allowed me to kind of balance things out a little bit. So real estate's always been a good buffer to everything else that I do. So love it.
Yeah.
Yeah.
Yeah. And you've built SaaS companies, mortgage, obviously, you're in the finance side. So you have a ton of experience. So there's a lot of different ways that we can take this. Um, let's start. You mentioned like after 2008 hit and you had to rebuild. That's always difficult. You never want hard times to fall on somebody, but if it
Yeah.
does and you get through to the other side, you learn a lot of lessons. There's a lot of things that you can pick up through that experience. So let's just talk about liquidating the portfolio, and then how the steps you took to build back up after that.
Yeah, for sure. Yeah, it's never fun going through hard times, like you said. And at any given point in the market, there's people making money, having success. There's people maybe faltering a little bit. So if you're listening to this and you're having a rough go, you can get to the other side of it. Just put one foot in front of the other. I've been there a couple times in my career, and there's usually a happy ending if you just keep pushing forward, and if you pay attention to lessons. That's the key, man.
That's
Just
the
don't make
hard part.
the same mistake twice. I'm making lots of new mistakes every day. I just don't want to be making the same ones over. So yeah. So that's liquidating it is what it is. You sell everything off, and you wipe the slate clean and you start fresh. So probably like late, I don't know. I even sold our primary residence, sold everything, like
Oh,
absolutely
wow.
everything. Yeah, yeah. And I started my business up from a dead stop because the program that we were running just didn't work anymore after 2008.
And this was a software program.
No, what we had a really cool way of attracting clients and investors and things like that. We did, not to get into it too much, but 2006, 2007, we did public seminars educating real estate investors on some financial strategy stuff that really only applies in Canada. But
Hmm.
we had built that up to Like we were dropping 600,000 flyers a quarter. We had radio, we had TV, we had bus
Wow.
ads all across Canada.
600,000 flyers. That's crazy.
Yeah, it was crazy. We were doing 2.5 million flyers a year to people's doors. So we
Jeez.
we brought 20,000 homeowners into probably about 300 seminars over the course of 2 years,
Oh,
and
wow.
in different provinces, which is
Mhm.
our equivalent to a state. And and that worked really well, but I wasn't making much money at it. Like we did about $1 billion worth of mortgage applications in 2 years, and this is going back like this is 2006 when mortgages were a lot smaller. And we were just kind of treading water. We had a whole system, and what the mistake I made at the time was I was like, man, I'm doing all this work and I'm kind of making a little bit of money, but my biggest expense was the marketing. And with back then, like if you could do, if you were on radio or TV or anything like that, if you pre-committed, if you made a commitment for like 3 months, 6 months, a year, the longer out that you pre-committed, the better deal you could get. So I pre-committed like 6 months worth of ad spend.
Mm.
But when you're doing that level of ad spend, we were spending multi five figures a month. So it was a big check to write, and I wrote that check in August 2008 for the next six
Mm.
months, like to get me through the winter, like the fall, winter, spring. And then by September 15th of that year, the bottom fell out of the market
Oof.
and the capital markets dried up, and we couldn't run our program, and nobody showed up to my seminar. So I went from having like 2, 3 seminars a week with 100 people in seats to zero. Like nobody showed up for 4 months. And
Oh,
so
geez.
I didn't quite go bankrupt, but I came pretty close, and I lost all that marketing money. So that's why I had to reset because I had no way of generating revenue, and I owned 20 plus doors, and you know what that's like. There's a
Overhead.
lot of worry and anxiety. Like if you have lots of cash flow and you have a big portfolio, it's cool. Fridge dies, you need a new roof, whatever. You can just kind of dip into the cash flow. But if your cash flow reserves go and your capital reserves go, suddenly that portfolio feels a bit more stressful because you just have no buffer. And I
Hmm.
still had equity in there, so I just sold the whole thing and started fresh because I needed to get my head straight. And it took 2 years. I quit drinking. Yeah. So I've been sober for 15 plus years now, and
Nice.
it was in that period of time things just got really, really stressful.
Yeah.
And but it's been great ever since because I got my head screwed on right, and I was able to rebuild with like a fresh perspective.
Yeah. Well, I
Yeah.
mean, sometimes it takes, situations like that to make you realize what needs to happen and what you're doing wrong. And then, you have an opportunity to change the behaviors going forward. So it looks like you have, and it looks like you've gotten to the other side, which is great.
Yeah, yeah. The lesson there is like don't do anything that's going to put your core business at risk.
Yeah.
And so I took on it wasn't leverage in the sense, but I levered myself on the marketing side to get efficiencies, and I way overcommitted, not really understanding the market. I mean, in fairness, nobody really saw
Yeah.
that coming.
There was
Like
one
a couple
guy and they
people
made a
did.
movie about him. So,
Yeah, like I'm not Michael Burry, you know what I mean? So, but yeah, so there you go.
so yeah, it sounds like marketing was one of the downfalls there. I'm sure since then you've learned a lot more about marketing, about efficient marketing, about where to put your dollars. So let's hop into marketing. Marketing is a big piece, even on the
Yep.
on the investor side. You have to generate leads, you have to get in contact with sellers. So what are the new methods that you like doing for marketing, and what do you feel is most effective?
We've done a lot of stuff like the way I rebuilt in 2011, 2012 is I went online because we were in the finance space. So at that time, like, advertising mortgage rates and attracting people online was pretty fresh. So that's how we rebuilt our business. And so today we have what we have under Tango. You talked about that earlier. And a lot of that is from that momentum. If I was starting and we were able to attract mortgage business, but also investment deals. So one of the things that I was able to attract at that time is I had no capital really, and so marketing online was a lot different than doing radio and TV. Like you
Hmm.
could turn it on, you could turn it off, you could spend a few bucks, get a lead, dial the thing back, close a deal, generate some revenue. Like you could really control it way better than say running a seminar where you had to pre-print,
Six
500,000
months. Yeah.
flyers, right? Like it's like you got to know what events you have, you got to book the hotels, all that kind of stuff. So going online was like a breath of fresh air. So I was like, I could spend 250 bucks, find some business, catch my breath, watch and repeat, double down. So it was a better program. So we know that like the world we're very comfortable with that today, but at the time it was pretty new. And one of the programs that we came up with was rent to owns, which is not anything innovative. But what we did is we connected tenant buyers who had down payments with qualified investors who wanted to buy good, predictable, cash flow. And we also brought in the real estate agent who could help transact on the file, and then we could come in and we could provide all the financing. And so it was like, there's a lot of wins there for everybody. And in 2011, 2012, 2013, like, you really were at a place in the market where you could help someone buy a home using a rent to own strategy, and they had a lot of upside potential. Um, it's rent to owns are a great down market strategy. So when there's less real estate transactions, really, really great way to work with realtor partners who want to promote those types of things. And when it's a down market, then there's more potential upside for the tenant buyer. Like, rent to owns don't really work when the market's high. Like the worst time to put someone into a rent to own is when the market's high. Like they need that
Low
appreciation
interest
in order
rates.
for
Yeah.
the economics to work, right? So that's the easiest way to look at it. So it was just good timing. So we did a lot of rent to owns. And the one thing that I managed to do through that whole period of time is I didn't blow my credit up. So
Mm.
I was able, even though I didn't have much capital coming out of that, um, I was able to like get my cash flow up pretty fast through the marketing. And then we found tenant buyers who had down payments, so they didn't qualify for homes. So I was able to qualify for a lot of properties. So I didn't just connect people, but I actually did some of those deals myself. I probably
Mm.
did a dozen of them. And it was a great way to get back into real estate investing because I didn't have to bring any capital to the table. I just had to put the loans together, and then I basically co-own those properties with the tenant buyers. And you get good buyers in the house. You don't have to worry about rents being made. They have everybody shares in the upside. So those were great. I did those for a few years, and that allowed us to build a lot of momentum back up for rebuilding the portfolio. So
And were these properties that you just found on market? They were just somebody listed their property and you went to buy them and connect them with somebody that wanted to do
so
right
this
to
is
them.
what's cool about the program is we found through our marketing, and it was not just our online marketing, but we went out to our realtor partners who wanted to talk about this program, and they found clients and like tenant buyers and investors too, because they had. So I really like doing marketing through partners. So if you can
Mm.
find a win for the partner, they'll open up their book essentially and bring clients. So so we worked with realtor partners in different cities, and we had some online stuff. And so we would find the investors, and we would find the tenant buyers. What's cool about the way we did it is we pre-qualified the tenant buyer. We said, hey, look, based on where you're at, 2 years from now, this is probably what you're going to be able to afford for a
Mm.
home. So let's go buy that for you today, right? We'll team you up with an investor, and you get to actually pick the home that you want to live in forever. And so we would actually like work with the realtor, work with the tenant buyer, work with the investor, and we would go buy their perfect home.
Oh
So it
wow.
wasn't like we had a portfolio of properties that we were trying to, jam tenant buyers into. They literally they felt empowered. They could go out to market. They could shop for a home as if they were going to own it because they were ultimately going to own it. And so there's a lot of pride of ownership when you take that approach. So we brought really good people together because of that.
Yeah, very cool.
Yeah.
So on the marketing side, I guess what platforms you mentioned online is what you were doing mostly. What platforms did you find the most success with? Were you doing pay per click? Were you doing
Yeah.
Facebook ads? What
We're
was
doing it
the
all. We did our own in-house pay-per-click. We did Facebook ads. We bought a lot of leads because there's a lot of platforms that attract people, and their model is to sell leads. So, and then we had direct partnerships with groups that had a lot of lead flow. We don't do much of that anymore, to be honest, because there's the economics aren't there anymore. It's way more
mm,
competitive.
mm-hmm.
It was a lot easier to pull off a lot of those negotiations with third parties in 2012, just because there
10 years
wasn't a
ago?
big
Yeah.
market for them. People didn't understand how to sell online. They didn't understand how to, like, we took our business paperless in the mortgage industry for us in 2012. And there are still people today in the industry that are like, hey, how do I go paperless? You know what I mean? Like this is like nobody went paperless. Nobody we did meetings online with clients like we're kind of doing now. We had WebEx. I used
Oh yeah. Yeah,
WebEx.
yeah, I
You
remember
remember
that.
WebEx?
Yeah.
Like trying to get someone to actually like download WebEx and stuff to like have an online meeting, but that's what we did. We did a lot of phone calls. So we went remote online. We didn't see anybody, and we built a whole platform around that in 2012. So that was pretty innovative. Um, but today, honestly, if I was, so I have a whole marketing coaching business that I do for mortgage and mortgage agents, real estate agents, financial planners and so on. And what we coach there is partner marketing.
Mm.
And so, and this is kind of what I did with like the rent to own. So if you're listening to this, if you're an investor, you're trying to raise capital, you're trying to find people, the thing that seems to be working really well right now is focus on making your partner like the person that you're trying to attract the superstar. So for example, I help mortgage brokers attract realtors. And the way we do that is we help the mortgage broker write and publish content that the realtor is going to want to share. So we educate. So we create content that educates homeowners and home buyers and real estate investors around financial strategies. But we do it in a way that that makes people want to buy more real estate. And so then we go to the real estate partners and we say, hey, we've got all these cool strategies, we've got all this cool content, what do you think? And then we teach our partner how to sell using these strategies, and then they open up their database to us to help them. And so, and when I say us, I mean I coach. I've got about 1,000 coaching partners in my world, so I coach people to do this, and that works really, really well. And then we write the content in a way that it's like the partner that we're trying to work with, they become the guest author, like they become the proprietary content owner. So we make it all about them.
Oh, okay.
And that is such a good way. And it's no different than like you're inviting me onto your podcast. Thank you very much. You're making it about me. And so I'm very likely to obviously will when the show gets posted, right? I'm gonna tell my whole audience about the fact that I was on your show. So that helps you grow. So that same approach is what I recommend people do. So if you're trying to raise capital from, I don't know, whoever, for your projects, figure out how, like, who you go to, like, how do you make it about them, and they'll respond. So
Yeah.
yeah,
Yeah, that was the I was just kind of orienting this towards the investing world, and that was the thing that first popped in my mind is capital raising. And
yeah,
if you can use that same strategy when you're going out there and try to raise capital for your deals. And so it makes a lot of sense.
yeah. Wow.
All right.
So
Well, I'm going to take that opportunity. It looks like we have run down the clock, so it's time to jump into the quick question round. Are you ready?
sure, let's go for it.
All right.
I have no
Starts
advanced
with
knowledge of these questions either,
no
so
advanced
I don't
knowledge. It's
even know
all
where
off
you're
the
coming.
cuff.
Yeah,
All right. It starts with education. Could be any form. Could be a conference you've gone to, mentorship program you've been a part of, a book you've read, movie you've seen, anything. But I need two recommendations: one for general life wisdom, and then one for real estate.
okay, interesting, cool. um That's funny. I was on a show the other day, and someone asked me like, "What's a recent book you've read?" I'm like, "I haven't read any books in a long time. Super busy." We had a good laugh about that. But one that's come up in my mind recently was the Good to Great. Jim Collins wrote Good to Great,
Yeah.
and there's a lot of life wisdom in there too. It's a business book, obviously, but going back to my story about how I kind of like extended myself a bit too far, and that caused my whole core business to collapse. There's a philosophy in there, which is sort of like protect the core and then try new things. I'm probably not saying it right. I'm sure there's like a better terminology, but the idea is so everything in my world is I've got my core business now, and then when I feel like that's stable and I want to expand it a bit, I'll allocate a percentage of revenue to trying some new things. And that could be like a new marketing program or a new this or new that. Like the new thing could be whatever you're passionate about in that moment. And I typically have tried, two or three new things at a time because I'm a bit of a mad scientist that way. And so I'm like, I want to I
Let's
want to
give
do
it a shot.
everything, and a lot of people are like that, right? So
Yeah.
try a couple things and then find the thing that works, kill the rest, and then really double down on it and bring it into the core. And that allows you to kind of expand your core. And then when you're stable on that, then try a couple of other things. And so that way, if any one of those projects dies, it doesn't destroy your core business and it allows you, and you can afford to kind of lose and then you can take it back. So that's like, that's one answer for your whole thing, but there's like business wisdom and life wisdom in that probably. So
Yeah. Yeah,
yeah,
that's a good book. And a good wisdom to learn is protect the core. It is so, especially in real estate, it's so easy and so it's something that I even struggle with is just the shiny object syndrome and always wanting to go after a new asset class, go after a new strategy.
yeah.
But once you first you have to establish what you're focused on and get really good at it and protect the core, and then you can start looking out. And so I like that. I like that perspective.
I dealt with my shiny object syndrome by creating a platform where I write content about all kinds of different financial strategies to support my partners, right? So
There you
then I
go.
don't actually have to do those things, but I get to have the creativity flow through me.
Yeah,
So
I
it's
like
good.
it.
Yeah,
All right, next question is for your younger self. Let's go back to the Jason who was just getting started back in I can't remember 20 years ago, I think is what you said. Go
sure.
back to him, look him in the eye, give him one piece of advice moving forward.
Yeah, trust yourself. Like you got this, tough times hit, you can work through it. And that opportunity that you think is that's a once in a lifetime opportunity probably isn't, honestly. Like it'll come back around again. So don't be too eager and just take your time with it.
Nice, I like that. I think that goes kind of along with it's okay to say no. That opportunity is not a once in a lifetime thing, and that is so
Yeah.
hard. Every deal that comes across my desk, I'm always like, oh, I got to do this. I'm never going to see this again. But it's not the case. There are always deals that will come to you, and
And you
so
know what?
it's
Everybody that's listening to this can probably look back in the rearview mirror and go, man, if I had just been a little bit more patient, stayed the course, like I'd have whatever in my
yeah,
life.
yeah.
And so it's hard to apply that going forward because you see all the opportunities, but looking back, it's really easy. So if you could just take a little bit of that wisdom into the today, I think everybody's gonna be fine.
Yep, couldn't agree more. All right, that goes to the next question. This is usually it's about the U.S., but since you're in Canada, we're going to open it up to the entire world. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Single metro. Okay. Interesting. Um, yeah. I'm not currently buying a bunch of real estate right now. I'm heavily invested. It took me a second to think about the answer because I'm not deploying capital into real estate in this moment.
Mm-hmm.
Only because I run, we talked about one business, but I actually own and operate three separate businesses. And it takes 100% of my bandwidth. So I'm very careful about protecting the core right
Protecting the
now
core.
to
There you
make
go. The
sure I'm
theme of the
just
podcast.
in a phase where I'm like, just make sure all these things work, and then I'm going to pop my head up. One thing that I think is very interesting that I'm like paying attention to is because I've got three kids, they're late teens, and it's getting harder and harder to get on the property ladder. And say,
Especially in
as property
Victoria.
values go up, yeah, especially in Victoria and Canada, like our real estate values are high in some cities. Um, and so saving enough money for a down payment is hard, but then qualifying for the mortgage is hard. And so a little bit of my time goes into there's a few entities out there that are like trying to figure out how to do shared ownership ventures where like the it's almost like a rent
Like
to
a
own, but it's not
syndication kind of
quite.
thing.
Yeah, it's like you put up a little bit of the down payment and the investor will put up the rest and you'll own the property. And then there's a bunch of different models right now that are being explored, and a lot of them have maybe not come to fruition. There's a couple people that I know that are working on some cool projects in that realm. And I think sometime soon someone's going to figure out how to help the next generation get into real estate through some kind of shared ownership program that really works, where there's a win for the investor, win for the company, win for the tenant buyer.
Yeah.
And um and I think we're close to that, and so I would look for that as a big opportunity.
Yeah, it's definitely a need in today's market, especially in like coastal markets, Victoria, Seattle. If you're even an entry level house is, six, $700,000. And if you're just getting started, how can you buy that? And so
Yeah.
yeah, if you're able to kind of spread that across multiple people, and then especially on the investing side and make it make sense, looks like that would be definitely an opportunity.
Yeah, yeah, I think it is. So yeah, there you
Cool.
go.
All right. Well, that leads us to the next question. This is, I lost my spot. I do this so often. All right. This is usually we ask about raising capital, but you do not need to raise capital. So we're going to move on to the next one. And this is about lessons learned. Not every deal we get into goes the way we expect it.
Mhm.
Most of the time, something goes wrong and we get to learn a lesson. We've already gone through one lesson from you. So if you look back on your past about different deals that you've done, what is one lesson that you could pull from them?
Uh, Due diligence, and patience, again. So just like really, really taking your time, really assessing the deal. Don't move too fast. Make sure you really understand that you've got it under control, and make sure that you can really afford it. A lot of times we'll look at opportunities and we'll be like, okay, yeah, I can totally do that. But we don't take into consideration all the what ifs. Take all those what ifs into consideration, put them into the model. There's a good chance, one or two or some percentage of those what ifs are going to happen. It's almost like, yeah, not all of them will happen, but almost 100% guaranteed some of them will happen. And
Murphy's
so,
Law. Yep.
yeah, you need to be planning for more worst case scenarios because it's not like the value of something from year over year doesn't really matter. What matters is how can you hang in there? Can you hold it? Right? Like all those stores that I owned in 2008, like if I could have just hung in there, I wouldn't have lost 3, 4, 5 years of rebuilding momentum and the amount of equity I would have gained if I could have just hung in there, right? And so yeah, make sure you can hang in there.
Yeah. Yeah, that is really good advice, especially on the due diligence side. I think that was one of the biggest lessons that I learned when I just got started, which wasn't that long ago. I got into commercial in 2019, so it was like 6 years ago. But the first couple of deals I did, when I did my underwriting, I was like, yes, this makes sense. But I didn't account for enough capital reserves. I didn't think that I would need, this amount of money because I just didn't realize things go wrong. Now, when I do deals, I'll always budget for capital reserves. When you buy the property, make sure they have X amount of capital reserves just in case something goes wrong, because something will go wrong.
It's a
And
smart
so,
move. Yeah.
yeah, it's a hard lesson to learn, but it's definitely something that
Well, you probably
that
sleep better at night knowing you can handle whatever's coming tomorrow morning. Like something's coming tomorrow morning. Like you and I both woke up this morning and there's something in our inbox that we weren't expecting. That's
all the
every day.
time. It's crazy. It happens all the time. But that's life. That's real estate, and that's the game. So that leads us to the last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to
Oh,
reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
sure. My handle's at Jason Henneberry, and there might be some show notes where they can find the spelling of that. But just DM me on Instagram or Facebook, or you can find me on LinkedIn, Jason Henneberry. It's pretty much the same everywhere. What you can expect is a response. So
Easy enough.
I like to be responsive. But make sure you tell me what the heck you're reaching out about. Don't just say hey. Like I don't
There you
respond
go.
to
How
those
you
ones.
doing?
Those feel a little clickbaity.
All right. Well, that is. I will put Jason's links in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down that full description, and there you can find his links. And that does wrap it up. So, Jason, thank you very much for hopping on the show.
Thanks, Gabe. Appreciate you having me, man.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.